What is up, traders? And in today's video, I am going to show you what to do if you've got a very small account. What I've decided to do is take a small amount of capital, $250, and see if I can double that account trading only BTC. And I actually almost doubled it in about 4 or 5 days. And then I took a silly trade and I went back down again. But currently, I am in a short trade. You can see here BTC USDT. This is on about a $250 account and currently $83, $84 in profit. So I've set my stops in profit. If I get stopped out, I'll make about $70 profit on this trade. But if that interests you, make sure you hit the subscribe button, click the like button, and click on the bell notification so that I can show you the journey that I'm going to be taking. So either I'm going to completely wreck this account or I'm going to make double this account every couple of days, every couple of weeks. And if that's something that is interesting to you or you'd like to learn about, then subscribe to the channel. But I want to get into Bitcoin technical analysis. So at the moment, we literally been ranging between this $2,571 area and right up to about $23,300. So let me just switch off some of these levels here so you can see a little bit more clearly. So I've pulled a fixed range between where we had the very large up move above that $22,300 area. And let me turn these off so it's less confusing for you. So if we pull a fixed range there, we can see where most of the volume is actually transacted. So right over there, 23,040 is the range value area high, range value area low, 22,601. So my take profit is actually around about there. I entered the trade, as you can see here, on a swing failure pattern. And this morning, I saw this high being taken out by this swing failure pattern. I didn't get it on the original move. So what I did was I drew a fib from the top of the wick, the swing failure pattern, to the low of that move. And you can see I literally got in right on where that fib retracement is. It's actually one of my favorite ways to trade a swing failure pattern, because often you take the original short or the long on the swing failure pattern and it could be a fake out. You can see here I entered on the BTC USD pair at 23,133, BTC USD 23,140. So yeah, my BTC USD also working on a very small account and growing it, so my risk isn't as hectic as on this BTC USD. So obviously this is not financial advice. I wouldn't recommend you do this if you don't know what you're doing, but it's just interesting for learning sake, and not financial advice. Don't try this, because if you are in negative P&L and price moves against you, you can lose your money very quickly. So that's why it's important to stick around and learn really what the strategy involves. And if you're going to do this with money that you can afford to lose. So $250, if I lose it, I lose it. It's okay. So let's get back to this chart over here. So we've got our POC right there. We've got our range value area low and our range value area high. And you can see here, we actually rejected perfectly on VWAP on the 5 minute. The VWAP is an area where there is a lot of liquidity and a lot of large traders fill their orders. And what I liked about this trade, as soon as I took it, I went down to a smaller time frame and I was looking at the market structure. And as you can see there, we started making some lower highs. And you can see we just have continued to make lower highs. We've continued to make lower lows. So that showed me that this structure was bearish. What I also liked was looking at the order flow. Right into the highs, we had about 9 million worth of dollars, a $19 million candle on the USD pair. And as you can see, longs all the way up into resistance, all the way up. So as soon as we had the swing failure pattern, we had a demand for shorts busy opening up. And you can see our open interest changed, which means that a lot of those longs saw the move down, started closing out. And I've been watching the order flow all the way down. So obviously this last candle, we could actually have another move up again because we've had an increase in open interest and very large delta in the positive. So I've set my stops. I'll actually show you where my stops are, not the trading stops. I've set my stop, take profit at 22,400, and I'll tell you why. And I've set my stop loss in profit at 22,932. So if that hits, the trade should make about a $70 profit on a $250 account. So I'm going to be showing you what I've been doing right, what I've been doing wrong. There are a couple of trades that I've got wrong, and about two days ago I'd got it horribly wrong. So it's very, very important to make sure that you record every single trade why you entered the trade. But literally, I doubled this account, almost doubled the account within about 4 days, taking 1 or 2 trades on Bitcoin only. So let's look at what could happen to price action. So obviously this range value area low is a very nice place to take a take profit, maybe even a take profit 1. And my idea is that I think we're going to eventually see a swing failure pattern of this $22,291. So I've placed a stop over there. Maybe if it gets to the range value area low, I'm going to take a 50% profit or a 75%, but stops at entry and just see where it could go. Now, obviously, we could see price breaking down tremendously. We've got a daily NPOC, and these are all time-based POCs based on the TPO chart. This is based on time, where price spent the most time, and obviously your fixed range on the chart is where the most volume has transacted. So when I drew that fixed range there, so that POC, range value area high and range value area low. But something interesting I've seen here, we've got a piece-shaped profile on the TPO, which normally means that there's large absorption that has taken place at these highs, which means people have tried to long the breakout at this point. Big players have come in and absorbed the price action, and that is also an indicator of a lot of stuck longs. So obviously we could see price go back up to there, and those longs that were now deep in trouble would have said, I'm going to close my long at this point. That will re-enter as a short. So we could see price come back up to there and make a very sharp move down back again. So obviously this section here, yesterday's POC, point of control, time point of control, you can see a lot of time was spent there in this area, 22,750. And I think the BTC USD pair has actually touched on that POC to the dollar almost. Where's my BTC USD? Okay, it's just taking some time to load. So let's look on the normal chart. Yeah, there you can see there's my NPOC that I marked in the BTC USD chart, and coming all the way down there, and you'll find that's an area of liquidity. That's why we've had a biggish bounce there. So that's also why I've put my stops in profit just above the wick of this last 30-minute candle. I think I put it at 22,932. So if we come above that, it's also going to start changing the market structure. There you've got a higher low. So if we break that again, then we start possibly changing market structure, and we could have a move back up again. So if I get out of this trade, I'm going to look for shorts above yesterday's high, which is that 23,197. Obviously, see the reaction of price when it gets to this level. If there's a rejection, the order flow tells me that it's bearish, trapped longs into the highs, then I'll take the short, and I'll probably take it the same as I did here on the Fib retrace, because then it's just a lot safer than entering right at that point and then getting out. What I could do is, if price breaks this high of yesterday's high, then I could get in at that point and just set the stop right above that wick. But that could be a dangerous play. But risk to reward is actually quite cool. Another target or area that is in play is this daily NPOC at 23 350. You can see we actually wicked above it on Saturday, the 21st of January. So we could actually come and see that high being taken out, an area of liquidity and price coming right down. So yeah, that's the range that we're in. Very nice tradable range, and you could even draw a little bit of a parallel channel if you like. We could draw it kind of this way, right there, and you can see most people would look at this as a possible bull flag. Look to take shorts at the top, look to take longs at the bottom, and obviously we had some deviations to that structure. If we look at the 4 hour, a lot of the moon boys are going to look at this as, oh, this is a bull flag, and yes, we could break out and watch out for the price action here. But I would rather take a long at the bottom of this channel, and if we get a breakout, hold the trade to higher levels. So what are the levels above? If we had to go above, 24,475, 23,800, and if we look at our levels below, those are the levels of liquidity that I'm looking out for. So yes, we can get a dump all the way down to that daily NPOC at 21,725, and there's a lot of single prints there, which means if we break this area here, we could have a very quick move down to the bottom there. So looking at our horizontal levels, very similar kind of levels for horizontal. There's a weekly and a daily there. I've actually put my take profit right at that daily level, just above that 22,400. Levels above, 23,937, 24, but that's still a long way to go. Looking at zooming out, we've had a lot of strength in the chart, but we really do need to break above this $24,000, $25,000 area to make the structure really, really bullish. So that's me. Let's have a look where I'm sitting at in profit. Oh, by the way, I see Jordan quickly coming in here on Wednesday night. Check out the Bybit Telegram group. I'll be doing a live stream in there with Jordan. So make sure you subscribe. Check the links in description. And yeah, we're still $90 in profit. So we'll see how that goes. So safe trading. Remember to hit that subscribe button, hit the notification bell, and click like. Let me know your comments in the comment section. See you later.